Good afternoon, everybody, and thank you for coming and joining us here at Contango's presentation. They're apparently going to kick us out of here in an hour, and she's got like a bell she's going to ring. So I thought that looked intimidating, so I thought I'd better get started here. I'll maybe wait a few minutes, let people grab their food and grab a seat. There should be plenty of seats over here. And don't forget the dessert things up front here. Well, again, good afternoon, and thank you for joining us at Contango's corporate presentation. My name is Isa. I'm the president and CEO of Contango, and as I said, I'm going to go ahead and get started because they're going to kick us at 1:40, and I think we got a bit of a late start with the speakers running over downstairs. But again, thanks for coming. I'll go through our corporate presentation, obviously make statements that I draw your attention to, as well as the cautionary language around resources and that we might be referring to throughout the presentation. So now I've made the lawyer happy, I can move on. So we are an exploration development stage company focused in Alaska right now. A number of projects in Alaska. It's a great place to work. We have our key asset is our partnership with Kinross at Manh Choh. Describe that in detail, and we're also partnered with the Alaska Native tribe that at Tetlin, the village tribe. They've been great partners for well over 10 years now with us for us. I'll talk about our recent acquisition at Lucky Shot, which is our second mine to be developed. That's why we put the S in parentheses here. We're actually working on two projects. And Kinross is doing the heavy lifting on one, so we can focus ourselves on the other. We have a number of early stage exploration projects as well. I'm not going to spend a lot of time on those, but they're basically things in the queue that we'll be working on over the next several years as we focus on advancing our more advanced stage projects. I'm going to start with just a bit of a brief overview of the company. We're a U.S. company. We're not Canadian. We have 6.7 million shares outstanding, which is a small amount of shares for a public company, especially an export. We've been very diligent about watching our share count. We have $29 million in cash. Strategic investment was made by the Alaska Future Fund, which is a joint managed by Barings, but the main participant is the Alaska Fund. And Alaska generates a lot of wealth through the oil business. It has a 17% royalty on all that that's developed on the North Slope. And that goes into what's called a permanent fund, or a good portion of that goes into the permanent fund. That is basically a sovereign fund. And a small portion of that, about $200 million, is put into the Alaska, which is intended to invest in projects in Alaska that meet a very specific threshold of investment criteria. And again, this is managed by Barings. We're the that the fund has made in the first investment in mining. So we're very proud to have gone through a very process with the folks at the permanent fund to make that investment. You can imagine in Alaska where everybody's worried about what is going to happen with the permanent fund. They don't do things just willy-nilly. They spend a lot of due diligence and time looking at companies, looking at management, and understanding what the plan is. And they're looking for a return on investment. This isn't a grant. They're an equity investor. So, but we're proud to have them, and also, keep an eye on. They have $200 million in that fund, and they've only invested $10 million of it so far. So, come up with good ideas for the future. I did want to spend a little bit of time just talking about the background of the company. So Contango was actually spun out of an oil and gas company. And the short story is that they came up to Alaska at the invitation of the Tetlin tribe when ConocoPhillips was this was in the 2000 timeframe. ConocoPhillips was thinking they were going to build a gas line from northern Alaska, from the North Slope of Alaska to tap into the gas lines down there to export Alaska gas. They actually ConocoPhillips actually opened an office in the small town of Tok, which has maybe 500 people in it, if everybody. And this got the tribe pretty excited because they have a big chunk of land in that region that they own, hands up, private land, surface and subsurface. So they said, well, let's see if there's any oil and gas on our land. So they invited the folks from Contango Oil and Gas to come and look for oil and gas. And unfortunately, these are all high-grade metamorphic rocks, and oil and gas, if there was any oil and gas on these rocks, it escaped the system a long time ago, which unfortunately for the oil and gas guys, but they had signed an agreement with the Tetlin tribe to look for resources, oil and gas and minerals. They said, well, let's see if there's any minerals here. And as luck would have it, and these are kind of stories that exploration geologists kind of hate, because we toil out in the field trying to find gold deposits, and they're literally the needle in the haystack. And these guys go out and the first hire a good friend of mine who runs a company in Alaska, Geological Services, and they went out in the first year they identified what looked like a very prospective, and within 2 or 3 years they had outlined a 1.3 million ounce gold deposit. So anyways, that's why our share count is low, because the success was very quickly. They spun this out of the oil and gas company and partnered with Royal Gold, who did a lot of infill drilling and really proved up the resource and added a lot of value to the project. But then the project kind of got high-centered because Royal Gold is a royalty company, not really in the business of operating. If you know anything about the royalty companies, they swear on the Bibles that won't be operated, won't expose you to operational risk. But the project got kind of high-centered. Royal Gold was the operator and didn't want to operate. So I stepped in beginning of 2020 and became CEO to basically get this thing off a high center, and came in and put a deal together to use their mill to process our ore, this high grade. So that's what we put together. Here's the location. It's in Southwest Alaska, over towards the Canadian, and we're right along the highway. Again, I said the land is private land owned by the Tetlin tribe, and that in itself, because most of the tribes have very small areas of land. This tribe at the time, when all the gold rush miners were traipsing through their country, they asked the government to establish an Indian reserve under the old Bureau of Indian Affairs Act, and so they did, but they carved out a big chunk of 675,000 acres. So that's about the size of Rhode Island, just to put that in perspective. And it's in the when the Alaska Natives settled their Aboriginal rights and title claims in 1970, Richard Nixon signed, this tribe said, just give us our land. We don't care about all the rest of this stuff. We don't want to be part of the tribe or that tribe. We just want to be on our own and do our own thing. So they own 675 acres of land now in Southwest Alaska that we have a mineral lease on, like pretty typical mining lease, and them closely for the last going on 12 years now. So we've got a very good working relationship with them. So in comes Kinross. And why do we do the deal with Kinross? Again, they have this underutilized mill. We can get rid of a lot of capital by not building our own mill, which numbers would probably cost somewhere between $400 and $500 million. We also don't need the permit facility because that's also at Fort Knox. That would probably take at least 5 permit under the U.S. regulatory system, and would be controversial for certain. All these are going to be controversial. So we just kind of sidestep 2 really big things: bunch of capital and a 5-year permitting timeline by utilizing the existing mill facility. Now we just didn't give this thing away. We had our partner Royal Gold, so we had to convince them to sell. We gave them a royalty. That's what they wanted in the first place. So they have a gold and silver property, and we sold half of our interest. So we had a 60-40 with Royal Gold. We sold half. Royal Gold sold all of their interest to give Kinross what they wanted, which was the majority position, 70% in the project and operatorship. So everybody's happy. Everybody get not a free ride. We have to pay our way, but we have now a 30% ownership in a high quality that we don't have to build a mill, and we don't have to capitalize a mill. We don't have to permit a tailings facility for. Or at site, put it into road haul trucks, truck it up the highway, and drop it in the Fort. The cost to doing all this, it's not for free, but it's $130 million of capital versus 500. So we put that deal together last September and quickly got working on the project. Again, they are doing all the heavy lifting. That leaves me to do other things, which is good for me, and I think good for others. The plan that we're executing, we spent $19 million this year fill drilling to do all the geotechnical drilling, all of the hydrology, etc., to get it up to a bankable feasibility level. And that work was done this year. The project feasibility study will come out next year. Meanwhile, we're readying the project for all the permitting to happen. It's relatively, in the scheme of mining projects, it's a relatively easy permitting, because again, we're not permitting anything controversial. We're going to permit an open pit, so we have to control the water around. As you can see here, our mine will be located on top of a hill. It's a round hill. Water flows away from us. That's a good thing. The key ingredient making a mine successful is water. Either you have too much or too little. You rarely have a Goldilocks mine, but in terms of water, it's something you have to manage. On a relative scale, again, this is a relatively easy mine to manage because the water is on top of the hill, and of course, it's frozen half the year. Which a lot of people ask, well, can you operate in Alaska in the wintertime? And the answer is yes. It's actually easier to operate in Alaska in the wintertime because the water is frozen. It's just like any other rock. The plan that we spent $19 million on is pretty much wrapping up. We'll have a joint venture meeting and plan out next year's specific budget. My guess is we're going to be probably the 100% on a 100% basis, about $40–50 million next year, starting early construction works the road, making it so that the big haul trucks can operate on the road, and then make adjustments and changes for addressing water ditching and things like that, putting our what we call a stormwater plan in place, and then works at Fort Knox to receive the ore. All that we next year, because we don't need permits for hardly any of that. So that work underway, start construction next year, and then 2023 finish up construction and start to production, and with full on production expected in 2024. The guidance that Kinross has put out to their shareholders, and that we've basically repeated, is that we'll be producing about, on average, 220,000 ounces of gold at the level. Our share then would be about 66,000 ounces. We're on a gold equivalent silver with this ore as well, so it's 4 grams of gold, but then the silver makes it about 6 grams. Gold equivalent, that's what is, gold equivalent ounces. So it's a pretty high grade ore, and capital cost is a range of 105 to 130. I'm going to expect the higher end of the range because, as I think we've talked about inflation, I suspect we're going to be at the high end of that range. And this number wasn't from 110 when we originally announced the deal. Most of that in play, again, we're not building much. We don't really care what the price of steel is because we're not building any big mill, but it's mostly labor. And it'll be fuel in our case because we are hauling the ore from our mine site up to the Fort Knox mill. So that will be a significant component of cost. Despite that, Kinross still believes that the sustaining costs will be about $750 per gold equivalent ounce. So if you think about that in terms of cash, our share is over $60 million of free cash flow for 6.1 shareholders. Now, I am going to uplist onto the New York Stock Exchange, and I probably should go back a slide here. We're currently traded OTC on what they call the bulletin boards, which means you might as well not be trading. The SEC has made it very, very difficult for anybody to trade at OTC QB now. So we are in the process of uplisting to the New York Stock Exchange American, NYC American, and we'll documentation this week, and hopefully sometime in November with SEC approval, we'll be up and trading on a exchange with a real market maker and a bid ask that isn't $3 apart. I woke up this morning, the stock was 22 bucks, and when I got here, it was 18.69. So, which is a weird price for us because usually we trade in 50-cent or something like that. So I don't know if it's a Canadian exchange, somebody in Canada bought the stock or what happened, but it's our fundamental problem is our liquidity. It's been a friends and family financed company, and and most of the shareholders are pretty happy. They all like what we're doing. They like the in the gold space because they agree that it's a good space. It usually follows oil, or one usually. So we're going to address that by getting ourselves uplisted, and we'll do a financing, liquidity out there, get shareholders out into the retail hands, and get this stock trading. That's the main objective for the uplisting. So in addition to having a high quality, sorry, I just lost my track there, but I want to get back to cash flow. So if we're cash flowing $60 million a year in 2 years, 2024, I send out half of that to shareholders in a meaningful dividend for a small company, and spend advancing our other projects, so we get more things in the queue lined up for the future. In addition to have a high quality asset, in order to be a mining company these days, you have to with your community, and one of the best, not kill anybody. So you have to have no LTIs, no environmental infractions, run a clean operation, and doing that in Alaska for a lot of years. Years ago, we spun out Alexco, which is working in the Yukon. We created Trilogy Metals in the Ambler district. We know how to work in Alaska. We know how to work with the native community, and we've done really well over the years. So no LTIs is important. Hiring and training locally is paramount to having a successful project locally. When people are engaged, see what you do and how you run your company, it makes a big difference at the local. And then just telling them what you're doing. Our is to meet often, not wait until we've already made a plan, but make people in the community sort of part of the plan. Hear their concerns, what's important to them, hear what needs to be addressed in our plan. It's conversations that you say, well, I don't know, we haven't gotten that far, and what about that? It just makes for a great dialogue, and that's what you need if you're going to be successful in the there's many projects out there that are good projects that have lousy community relations, and they're going nowhere. The whole reason why this works is because we are in close. Alaska, of course, is known for some huge deposits. As I talked about Donlin, we found that 25 years ago, and it's committed. It's been a long time, and it might be a long time. I hope not, but I'm still. But this works because we're right next to the highway. The Alaska Highway sits right here. I'm looking towards Canada, looking towards Fairbanks, and it's about 200. And right behind the bushes there is where the Peak Gold Deposit, or the Manh Choh project, is located. About 10 miles off the Alaska Highway. Again, this works because Fort Knox has a 15 million ton a year mill that they about 9 million tons a year through. So it's half utilized. There's plenty capacity here to add our 1 or 2 million tons of ore a year. Now our grade is 10 times what Fort Knox grade is. They're averaging 0.65 grams per ton gold through their mill. Our grade, as I said earlier, was about 6 grams. This will increase in production for Kinross because it'll do that present the stuff that comes from Manh But this is very meaningful to Kinross. And again, the fact that they paid $93 million to buy into this on their laurels and, well, maybe we'll invest, maybe we won't. No, they're going to get after this. And we have this year. And as I said, we'll start. And as a 25-year operating, that's also, if you've paid attention to the junior mining space, your miners will be in production next year up, and the mill motor burns up, and this happens and that happens, and it wasn't, so the foundation cracked and delayed. This thing's been running for there'll be some blending issues that we'll have to address on startup with the Fort Knox ore with our ore, but that trying to figure out how, if the mill's going to work. Because you just built it yesterday. So as I said, we had a $19 million year, pretty aggressive program. It was one of the larger programs in the state. All in, confirmation drilling on what the average grade and size and where all are, to make sure you're not putting any facilities on top of potential future ore. Metallurgy to make sure, fine tune the recovery. This project has always had really good metallurgy. We're getting mid 90% recoveries on the gold here. It's a pretty easy ore. A bunch of geotechnical work, hydrology work, just all standard stuff. It all goes in a bank feasibility study. And the other thing, all these studies also then help you on water flow and how to lay out your management system for managing water. We did a little bit of exploration work. We actually don't have any results back yet. Prioritize the infill drilling so we could use that for modeling and all that. So I'm expecting to see some results by the end of the month. Program, but it was a pretty modest program this year. Definitely the focus is on getting this thing into production as quickly as possible. Here's the site layout. Again, it's like really simple. 2 small open pits, surface. Waste rock will be placed right adjacent to the backfilling. We'll start one pit and then backfill it and then start the other pit. Again, no tailings facility, so not a lot of construction going on. There'll be like 120 people here at site. Modest size. Most of the jobs are jobs that locals can easily get. They're truck driving jobs, they're mechanic. We don't have a mill, so we don't need mill operators and happen at Fort Knox. So again, very, very simple project. Here we have a lease on the entire 675,000 acres of Tetlin lease. Other state mining claims that are included, so it brings the total up to about 688,000 acres. So lots and lots of upside. We have a lot of data right immediately adjacent to the areas that we've already identified. The resource. 2 black areas here are the actual outline of the open pits, and you can see the size of are quite large in comparison. There's been a little bit of drilling, but not a lot, and so there's a lot of right here that we see beyond the 5-year mine life that we currently have defined. So while Kinross is doing all at Manh Choh, the expected out next year. Permitting should get going on late this year, and as I said, for some things we don't need permits, so we can get started on like fixing up the road and things. this next summer, and that's my guess is my estimation is $50 million next year on that early construction work, and then finalize it in 2023, and then full on production in 2024 through 29. So while Kinross is busy doing that, we're going to get started on our next project, which is the Lucky Shot. And the Lucky Shot mill in 1932, or sorry, 1930, it operated up until 1940, when the War Act pretty much shut all non-essential mining down in the United States. So unless you're pretty much asked to shut your mine down. That's the last time this thing produced any gold. Wood's precious in Alaska, so you can't even tell this mill was here. There's not like a board left. So they took it somewhere else. I'm not sure where it went, but they actually mined the ore at the tunnel up there, and then they had a tram that hauled the ore from a tram down to the mill. We're not, but this was a quartz vein, very simple quartz vein, gold. Very, very, very simple metallurgy. And that's one of the things I really like about the project. You see all the specks of free gold. This is very easy ore to crush, grind it, and you gravity float the gold off. So this property is 250,000 ounces of gold from an average grade of 1.5 ounces per ton. That's like really high grade ore. The whole district, there's about 30 different mines at the time, and the whole district produced about a little over 600,000 ounces of gold. So it's the third largest in the state of Alaska, and it's right outside Anchorage. It's not way out in the middle of nowhere. It's right on the road system, which is another reason I like this thing. It's got grade and it's got impact. In the early 2000s, another junior company had it for a short period of time, and they developed a source of 120,000 ounces at 18 grams. That's just kind of up the hill. I'll show you later where that is. And they used a helicopter. It was a helicopter-supported drill program. That was kind of what they were used to doing. Not what I would have done, but they drilled 173 holes on top of a mountain with using very elaborate pads to access the area. I can't do them, but I'm not sure what the big plan was, because it's on top of the mountain and it's a steep mountain and it's not enough ore to tram down, because trams are expensive to build these days. You wouldn't do it like you did it, at the turn of the 19th century. So, but that infrastructure, that resource is there, and it's good to know that they drilled the vein half a mile away, and we're still getting gold in it. So we acquired in about 3 months ago. I hired the mine manager from the Pogo mine, which is one of the other large underground mines in Alaska. Produces about 300,000 ounces of gold a year. Sumitomo, they sold it to an Australian company, and the mine manager, Chris, stayed with it for a year, but then he wanted to transition out, and so we nabbed Chris to come. He's now our mine manager for the Lucky Shot project, Chris Kennedy. And the acquisition here, we bought a set of patented claims, 2 different blocks of patented claims shown in the orange here, and that's where all of our current operations would be. They're surrounded by state mining claims, and we staked this recently. We the darker blue block there, so we have a pretty commanding position in the district. We basically tied up most of the district. So patented claims here and there that we'll probably pick up over time, but our focus right now is going to be on the Lucky Shot. Very simple geology. This is a quartz vein hosted by a granodiorite, so there's not a lot of complicated geology here. It's a very simple vein. There's a whole series of them in the district, but we're going to focus on the ones right here at Lucky Shot. Great infrastructures I mentioned. This is a borough. We have boroughs in Alaska. They're kind of equivalent to counties down here, but it's a county maintained. And the mine is located just off of this, like 100 meters off of this, right? So right off. There's 100,000 people that live in the Palmer, Wasilla, Willow area. And so we've got lots of people that come work at the mine. I've already gotten 3 applications from people who live out in the area. Heard we are interested to work there. So I'm sure we're not going to have any issue attracting employer. Mining jobs pay really well too. It's just, mining jobs pay on average about $115,000 a year. Most miners, mechanics, and that make about 150. So it's a good job, and people like those jobs, especially when they can go home every night. I mentioned the drilling that the other company did, Full Metals. They were called Full Metals. These are some of the results. Basically, they just established that there's this high-grade vein that's, and they drilled at the top of the mountain about a half a mile away where we are. So we'll sort of launch on those results, and our get underway here with getting underground. To start that, we very detailed drone survey with for aerial photography and LiDAR. You can see, I think this is the little drone guy is going to take off. These things are pretty cool. There's been a lot of this kind of technology, but it's amazingly how small these things are and how easy they are to maneuver. Yeah, like a 12-year-old to do this is just like playing a video game, but it's pretty cool. So we got some shots here. Just, you know, these are very super high resolution, and you're actually LiDAR, which is when you start building things, you want to know exactly where everything is. So this is a great recordation in the digital image of the topography. This is the actual Lucky Shot adit. It's about 600 feet above the other adit, the N-Search adit that I'll show you in a minute. That's the actual picture of the adit. We've closed it off for safety reasons, but we can reaccess that. So this is an older version of an aerial photograph. You can see the county road there. You can see the Lucky Shot where the Lucky Shot tunnel is, and then the other one I want you to focus on is the N-Search tunnel. It's lower. It's about 600 feet lower, and all those squiggly lines, that's the historic underground workings off of the Lucky Shot tunnel, and that's where they mined the 250,000 ounces of gold from. The adjacent Warbaby mine has a small bit of production, and the Coleman area had a small bit of production. And the Coleman area is where that other company, Full Metals, drilled 173. So it's all on our property, but as you can see, it's right at the top of the mountain, and it's actually on the top and the back side of the mountain. So I don't really understand what their plan was, because you don't have the infrastructure to develop a mine on top of a mountain like that. That'd be a big challenge. We'll access it from underground, but I'll show you that in a minute. So our plan basically is to re-enter the mine and the lower level, the N-Search level, rehabilitate that, and then base the vein, drill it from the footwall, cut across the vein, bulk sample the vein, get on the hang side, and drill it from the hang wall side. And I'll show you that in a second here. So this is this one active? This one's active? Yeah, so this shows the guy. Now he's not a 12-year-old, but he's a growing man, but it is kind of like playing a video game. And this drone here is in a cage, so it doesn't bump into things. It's got smart technology, so if it stays away from the walls and things that are hanging down and things like that. So it's pretty, again, pretty cool to see this technology being applied. This technology looking at dams, repairing dam sites where you don't want to go, and also in sewers where you definitely don't want to go. So, but it's great to see this technology being applied to mining. So there's the underground mine. This is from the drone. For the most part, there's one fault zone that we've got to fix up, and we'll probably put rock and shotcrete it, so that's basically just from a safety standpoint, keep it to the modern method or modern standards. You can see here this is just about a video. So this little cage is just going down the adit. He's flying it, seeing where things are. But you can see it's in the workings are in really good shape. This is about an 8 by 5, 8 feet by 5 foot, a 5 foot width, 8 foot tall adit. We're going to increase that to 10 by 12, so we can get the large rubber tired beam in there, and just that gives us a lot more flexibility in terms of our mining method and our mining approach. This was cool. This was done. This was actually put in done in the early 1980s. Yeah, no, this is a 0 degree. When we add some more depth to it, we're going to put about a 1 or 2 degree slope on it. Then it helps drain the water better. So you can see it's just, this mine's in really good shape. We'll refurbish this. There's 1,400 feet of adit in there. We'll add about 700 feet of adit, and then we'll be next to the vein, and then we'll drift along the vein, both directions, and then just put drill sticks and just drill the hell out of it. Punch through the vein, bulk sample the vein, get out on the other side and do the same with the drift over there, and drill it from the hang wall side. Down dip further. Both of those panels should, if the grade's consistent with what was mined there historically, we have a lot of reasons to believe that it is, geologic reasons, then there'll be about 500,000 ounces of resource between those two panels. Enough to start a 50,000, 60,000 ounce a year mine on. So, and I've got to do it. I've just hired Chris Kennedy. He's a great steel from Pogo. Kind of surprised it was good. You can see in the cross section there our plan, which basically the tunnel coming in and drilling it from the and then drilling it from the hang wall side. It'll cost about thumb suck number about $15 million to do that, and so we've got the money to do that. And again, if we raise additional money when we get listed on the NYSE, get more liquidity out there, get the shares trading. Then we've got ways to get Manh Choh in production, and little longer time frame, the Lucky Shot into production. And again, thinking about in 3 years doubling our production profile from 50, 60,000 ounces to 100,000 ounces, and then also thinking about, I've got less than 10 million shares outstanding, dividending half of that revenue to shareholders and spending to go find the next one. In its district, there's a lot of exploration upside here as well. Manh Choh, we already talked about, huge land position there. This isn't as big a land position, but all these small historic mines produced gold from these same kind of veins. They're called mesothermal veins. They tend to be deep in the Earth's crust, where the pressure and temperature gradient, there aren't pressure and temperature gradients. The crust is sort of heated, to a temperature and a standard pressure at that 5-10 kilometer depth, and so you don't get a lot of gradients. And when the vein is productive, it's productive for a long ways. And that's basically what the district geology is telling us. What drilling that Full Metal did on the top of the mountain is telling us, because we're half a mile away and we're still seeing the same kind of grade, same intersections. I mentioned that we had a number of other projects. I'm not going to talk in any detail about them. Happy to go over them if you want to have maps down at the booth there. But we have 2 other projects immediately adjacent to our Manh Choh land position. Triple Z. This is a big copper gold porphyry. We're waiting for a land transfer between the state or federal government to the state before we can drill there. Hopefully next year. We have a big block right on trend with the Tetlin geology. We've done a little bit of work on that this year. We'll plan there in next year. And then we earlier this year we picked up the Shamrock property. We staked that. It was open ground. It's an old historic placer producing district that's produced about 100,000 ounces of alluvial gold, and we're going to go in there and find the load source for the alluvial gold. And again, right next to the road, all of our projects, Lucky Shot, Shamrock, Eagle Hona, and Triple Z and Manh Choh, all right I'm not going out in the middle of nowhere and finding a big gold deposit again. If we find a big one here, I'll be fine with that, but we're going to stick close to the road system. So key takeaways, Manh Choh is our cornerstone asset, if you will. It's the most advanced. Kinross paid $93 million for it, so they're they're on it. They're not. This is not something that might happen. This is going to happen. It doubles the mill output of gold for Kinross at their Fort Knox mine. So that's very meaningful for them. They had a $19 million program. I think that for the fact that it's important, get this thing done, get the feasibility out, start construction in 2022, finish construction in 23, and ramp this thing up into production, full-on production in 2024. 66 is on average coming out of this thing. Generally, when you put a mine plan together, you put your best ore forward, you tend to produce more ounces in the beginning years than last year. So my guess is we'll closer to 80, 90,000 ounces of production in the first year of operation here. Not the average. It'll be above average. 7 costs, that leaves us, plus $60 million of free cash flow a year. So we can get Lucky Shot into production. That'll close to double our production and give us other projects to work on, as well as being able to dividend some meaningful dividends to shareholders, keeping my share count low. So I'll stop there and we'll just open it up for questions. As I mentioned, you may have not heard that, but it's actually easier to operate in the wintertime for a mine. Yeah, because the biggest evil for a mine is water, flowing water, running water. In the butt is when you've got a lot of water around. So the fact that when in the wintertime, yeah, you got to push the snow out. This is interior Alaska. We actually don't get a lot of snow. It stays once it's there, but it's not like we get 60 feet of snow. 60 feet of snow is a lot of snow to move, but we get maybe. Yeah, well, the darkness, take your vitamin, what is it, B? Take your vitamin. And I mean, keeping people safe is the main thing. So we can put lights on the areas up, but none of the mining operations in Alaska shut down in the wintertime. 24/7. Exploration shuts down because exploration is a lot harder, and if you're using helicopters, you can't fly when it's dark and all those things. Yeah, it was about safety. George? So the entire tribe is about 250. Half live in the Tetlin village, which is on their land, and half live in the sort of surrounding community. They're employed now. Yeah, yeah. And they of course have a royalty as well. So rough numbers, they'll be between $12 and $15 million a year. Yeah.
Another ore body somewhere else that would get priority?
It's good. It's a good question, a fair question. Build project into production, or they will. They just broke ground on it earlier this year. That project has been in their court for 5 years, plus years. So it's possible. Actually, and I'd say it's everybody else to sort of bump us out of line because you'd have to find it first. So if you found it yesterday, it would take you 3-4 years to find a resource and get it there. So and even if it would have to be better than 6 grams per ton, which in gold is like seriously good grade.
So they're blending the ore. So how do you know your share?
Ah, yes. So you have experts to keep them honest. There'll be there's a very detailed agreement that says how this whole thing works. What took the longest, frankly, to negotiate. And the good news on that score was Royal Gold on our side, because Royal Gold has a royalty. And so they're worried about the same stuff that we're worried about, not getting screwed by Kinross, which I'm sure Kinross would never do. So. Damn deal. silver, and it's not a lot of silver because unfortunately, we don't really have a silver circuit, so it's what goes to the doré. That's it. Ours will be around. We just got a cash call yet today, so that should round it out. We need to. It's something certainly to take a look at. In Alaska, there are about 3 companies that barge fuel comes from Seattle. This is diesel fuel. It all comes from Seattle. All comes on barges. There's companies that do this. What they do is they give you a spreadsheet and they say, if price is this, diesel price is this in FOB Seattle, I stick it on my barge, I put it on my truck, it to you for X. So you can hedge that, but something you just have to take a look at when as prices as we get closer. The last study that was done with regards to that 750 all-in sustaining cost, which is operating cost, if you will. I think they used $70 barrel oil, if I remember. So it'll be higher, and that's why I'm going to say I think that 750 all-in sustaining cost is going to go up. I mean, we're seeing inflation left and right. Again, we have a lot of things that are going to inflate. Inflating, definitely inflating. But I also think at the same, if that's happening, I suspect gold price eventually, maybe Bitcoin goes through the roof. I don't know. Oh, sorry. You say circumcised? Oh, certain size. Sorry. Sorry. No, it would actually truck run a mine ore to the mill. There's not a volume issue with the trucks. You can get all the ore you want with the trucks. You'll limit out on the highway before you'll run a mine. Usually about like that. Not at site. I mean, obviously. So at Fort Knox, what I expect we'll have, one of the things after this year's review, we did, I use Royal We here, but again, it's Kinross doing all the heavy lifting here. But we decided that was the bell. Wasn't that intimidating, but we decided we're not going to at Manh Choh because power is a lot cheaper in Fort Knox than it is at Manh Choh, where we don't have power out there. So we'll have crushers, but they'll be at Fort Knox. So that's part of the $130 million of capital that we expect to spend. Yeah. I'm sorry?
What is your plan for coming out?
Well, that's the total. So our shares, 35-ish, 40. We've got 30 in the bank, and as I mentioned, we're going to the exchange, and I'm going to do a serious financing because I want to be able to stand up here and say, hey, we got all the money we need to do both Manh Choh and Lucky Shot.
It sounds like you already have
We've got a good. We're spending money. We spent $6 million this year on Manh Choh, so we're almost finished with the cash calls for this year. So I think we'll probably end the year $27 million. And again, next year's budget, our share, if I'm right on my guess, will be about 15. So we'll keep the till full. Well, I need liquidity. I need people trading the stock and put stock out there to trade because I'm blessed with really happy shareholders. Stock. I saw a question over here. Oh, here. Sorry. Well, I guess to put my money where my mouth is, I bought shares at $1 million worth of shares. So I was really pissed off today when the stock was 1869 on, you know, what 100 shares or. So yeah, no, I'm aligned, and I really believe this project. I've worked a lot in Alaska over a long career. I've worked all over the world. I worked in Africa and Asia as well, South America. I like Alaska. It's a fun place to work, and there's good deposits there, and some of them are on the road system. Well, we got the. We'll go back down. We'll clean up here a little bit, but we'll go not the dishes, but we'll go back down to the booth. If you've got questions or just want to chat, come on down. We're here today and tomorrow too. So thanks again for your attention and appreciate.